Hey traders, it's Leaf West. I'm going to go over the trades I did today, or most of them, if not all of them. I want to start off with potash. Potash I bought at the end of the day yesterday. As you all know, Thursday was a pretty hard afternoon for the markets, and potash has been selling off for quite a few days here. And this is the what I was looking at with potash yesterday. It just looked like the selling was overdone. We got into a target area of a projection down of a wave, so I was able to buy the stock towards the end of the day at I think it was 54 cents or something like 52 cents. But anyways, bought it in the last 15 minutes of the day and got a pretty good price, I thought, and I was willing to hold it overnight. And and I want to show the grid I put up that I posted pre-market that showed the pre-market activity in potash and what I try to do with if I make a play like this where I buy a stock that looks like it's overdone and hope to get a pop the next morning and sell it into the pop. So I treat it like this is a 10-minute chart for potash. I did before the regular hours opened up. And so I put a reversal grid on the price of the stock from the last sort of high, swing high down to the meaningful, hopefully swing low key reversal point. And then what I will usually do is depending on where it looks like it's going to trade pre-market. And potash doesn't always trade pre-market like it will after the market opens, so you never know. But my premise here was to take half of it off at the 61/8 level, which to me, if the bounce was going to fail, it was going to fail right around that level. So I set a limit order up at 43.87, which was right on the 61/8 of this pre-market grid I put up, and actually put an alert at 43.75 because I wanted to see how it was going to act around that price, whether I should cancel my order and let it run or sell it all or what have you. And here's what happened. Here's a 3-minute um, chart for potash for the actual regular trading hours. And after I posted that previous chart, the market, potash had trended down a little bit. Doesn't trade much pre-market usually, but anyways, it opened up and it popped right into that level that I'd set my limit order at. And once I saw the sort of 1 minute and 3 minute dojis being created around that price level, I let the whole thing go. But I just wanted to show you how I handle those kind of situations. And that 61.8 level is a big level I use for a lot of retracements. And I was again, I was quite happy to sell it there and make a little bit of money and go away. I did not look at really at potash the rest of the day, and as you can see, it made it sort of a pullback with the market and then flatline. And it was OPEX day today, so there's a lot of the afternoon trading in OPEX days can be either very exciting or very dull, and today was very dull. So let me pull up a spider because I did a couple trades in the spider. I'll talk a bit about my pre-market outlook on spiders that I do. Again, I think traders should have a plan going into the day, and it looked like, again, this is a pre-market chart snapshot I took, and here's the control bar values that I look at from the previous sort of swing highs and swing lows from Thursday, and the low here was 123.30 and the high one was 123.98. So, and pre-market it was trading a little bit in that range, even though it sold off a little bit after I'd taken the snapshot. But it it gives you an advantage at looking and planning for levels, and I think that I encourage all the traders to do that. So, anyways, I looked at what possibly could be happening. And we were going to get a bounce. We were going to get a bounce from the spiders that looked like pre-market. So again, what I do is I go. This is a 10-minute chart. I go back to the previous swing highs and I draw retracement grids. And to me, again, the 61.8%, this blue line, is the key line. So the last swing high to the swing low of late Thursday afternoon, I measured that, and that's my first sort of minor resistance level, and it was right around 123. And then you go back to the bigger move down and do a reversal grid off of that, and that's your major resistance that you could possibly see, and that's what I thought was in the cards for today. I thought that the maximum pain for the options on the spider was 124. So I thought we would get up at least to this first minor resistance, test that a bit, maybe pull back, but I thought we'd get above that and below this more meaningful major resistance area, and 124 being sort of the number I thought we'd end the day at, which was right at the sort of swing high from Thursday morning, and it was the 50% level of the whole move down. So I thought that was logical for that to happen today, and of course that's not what happens. But if you step back and look at the move down and part of my outlook for the day, I could see the first wave, the second wave bounce, which was right to about 78.6, which is perfect what wave twos usually do, and the whole selling off yesterday afternoon looked like a really nice third wave, and it basically went down to 120, 123, and my wave projection, when I look at it afterwards, said that 120, 125 was where it should have gone if it was going to be the third wave of a five-wave structure. So I'm looking for a fourth wave bounce. So really what I wanted to do was get a sense of where resistance was. And so this is how I was playing the trade for the day. I was playing this bounce for up to around 124 and then playing for the sell-off on Monday. So that was my strategy. And of course we did not get all the way up into the slot. But that's kind of what drove my thinking early on in the spiders. I wanted to set that up as something you can sort of see into my mind of why I did what I did when I started trading the spiders first thing. So the spiders opened up and began to sell off, and this is right around the time I was selling my potash. So I wasn't really that worried about not being involved or looking that closely at the spiders. So when I came to the chart, I did what I try to do always when you have a gap higher and a pullback. I try and pick a point where you could get a nice key reversal trade off it, put a grid on it, and excuse me, put a grid on it, and then do a good mathematical, systematic approach to getting involved. So if you keep all you do is every time if you made a new low, which we did here, you just move your grid, keep moving your grid, and then monitoring price. Trying to guess where the bottom is a mug's game, and you may be right, but the odds are you're going to be wrong more times than not. And your best bet is to draw a grid on these reversals and get involved. I like to sort of start to get involved when it gets above the 61.8% level. And my plan was to buy in the gap just before the breakout, and then after the breakout pulls back. For a 123 target. To me, that was because it was first thing in the morning, I was going to take my whole position off at that 123 target, which was basically just at this grid target, but it was a round number, which is often a magnet. It usually will go, if it's going to go to it, it'll go a few cents through it. So that was the plan. And again, we made a further new low. So all I do again is just pull your grid over onto the new low. So this is, again, the new buy area, so all you do is monitor price. And so we couldn't get above that 61.8% level. And I got any more charts on that? Yeah. So we had a real hard time here. And price pulled back down to the bottom part of this pattern, this grid that I had snapped up. And I posted this tweet because I said if we were going to have a hard time at 61.8% level, we were going to break this low and go down. So I did a wave extension. I said, here's a likely target that price is going to pull into. And I was going to buy down here. Because again, my thought is that we were going to bounce today. And all that was happening, first thing I thought was a bunch of nervous Nelly retail holders who get margin calls from the big sell-off on Thursday and had to sell into any bounce. That happens. And so I was expecting that to a large extent. So that was the plan, and I got another one. No, that's my plan today. So what happened? I'll have to show you on the actual price. So this is the actual 1 minute chart from the spiders, and right here was roughly where I took a last snapshot and did a tweet saying it could get all the way down to this target level based on this first wave down. When we bounced, we came down a little bit further and we bounced up, and we again failed at the 61.8% level. again, I'm kicking myself a little bit because my bias was that we were going to go higher, which is fine. Everybody has a bias, but this was a slap in the face, and that I should have tried shorting this third failed attempt to get above the 61.8% level. Instead, what I did was when we came back down and we were holding above the prior two lows, here's the first swing low, the next sort of major swing low was here. When we put in this doji, I thought that okay, market couldn't sell off and that it was going to take off. So I got involved here, I think at 122.02 or so, right around this level, and actually put my stop at I think it was just above the breaking of the pattern going below, because I thought if this fails, if it doesn't go higher right away, it was going to roll over and then possibly go and test the low from yesterday afternoon. I didn't want to hang around for that. And again, I got stopped out, and I'm not sure if I was not looking at it at the time or what have you, but generally when you have these patterns and I have a bias that it's going to go higher, if it pokes down through the pattern and immediately goes back into it, that's a great spot to get long, because you're going to at least go to the 61.8% level. So you would have you could have bought, say, at 121.95, a few pennies into, like, that's 10 cents into this pattern. So even if you were not going to jump on it right away, you could have bought at the bottom of this pattern a bit, and you could have made yourself 45 cents for sure, because that almost always goes to the 61.8, and in this case it actually went to the top of the pattern. So that was sort of the mistake I made on that trade. And then the final one was based on my afternoon trading plan, and again, my bias was that we were going to bounce in this wave 4 move, and I thought if we started to squeeze higher in the afternoon, that we could still make it up to that 124 level. I drew, this is the 10-minute chart again. There's a trend line here in the breaking of this trend line at 122.25. I thought was the sort of start to the whole thing. So that was a key thing for me. So I zoomed in on this. Let me go to the real. Okay, no, I use this. So anyways, we had a contraction. This is the 1-minute chart. So it zooms in on the sort of 3-minute contraction, which I like to trade. This green squeeze indicator, along with the look of the 10-minute chart, with that trend line being squeezed into, looked like a high percentage odds trade for me. So I actually got involved before we got into the gap. I got involved basically as the price was getting above this 61.8% level, and I did my first ad there, and I think I did a second ad in the gap. I did a third ad on the pullback, which was my plan originally, and then I think I did a fourth one as we started to move off of the pullback. And my first target, you're not going to take the first target at 24 cents when the pattern's at 07, and again I thought we would get to 124. So for this contraction pattern I was going to trade, here's my targets. The first one was at really the second target of the grid. My second target was actually the top side of the opening range, which was at 122.65, and my last target was the third target for the contraction pattern grid, which was 122.82, when I was planning to take it off at 122.75. And this one worked out much better. It didn't show the resistance of going higher, which, go back to the morning grid, you can see the difference in the play. So when you have a high percentage odds trade, this is where you have to increase your size, and I think I got up to about 1.5 times my normal starting position for spiders, which a normal starting position for spiders for me is 1,000 shares. So I got to, I think, a total of 1,500 shares on this trade. And here's my stop at 121.85. Again, I like to have it sort of halfway between the bottom of the pattern break and the 31 point whatever it is, 38.6 level. So anyways, the video's now at 14 minutes. So anyways, have a good weekend, and we'll talk to you next week.